Hello and welcome to another video. Today we'll be looking at how you can hedge your trade for volatility 75 index. On the screen I have V75 15 minutes time frame and I'm trying to place a buy trade. Okay, I'm buying at 906,535.78, and now using Grail hedge strategy I'm going to hedge my trade around 4,000 points by placing a contra trade. I'm buying, so I'll place a sell stop so that in case price goes against my trade will be edged and I'll break even. Okay, and by doing so, I may not incur any loss on the trade, or I may incur a little loss or make some profit, some little profit. Okay, so Grail strategy is used in minimizing the loss you can make on your trade. It's a special skill, more like a martingale way of trading. Okay, you trade, like you place a buy trade, and price goes against you. Price starts to sell, you quickly place a sell trade. Price starts to buy, price starts to buy instead of selling. You place another buy trade. So that's the martingale way of trading, trying to cover position. So I'm buying currently. I place a buy trade at 906,535.78. So I'm going to place my hedge trade, which is going to be a sell stop, and that'll be around 4,000 points below my buy trade. So I'll be setting my sell stop below the buy trade around 4,000 points, and that should be around 902,615.78. So I'll not be using 0.001 for my sell stop. I'll be using 0.003. The Grail Edge strategy, okay, makes use of 3 times the lot size of the original trade when placing your edge trade. So I'll be using 0.003. Okay, sell stop. This is going to be my pending order. Okay, 902,615.78. okay, so that's my hedge trade. It's a pending order. In case price continues to go down, it will trigger my hedge trade. Okay, so for Grail strategy, the distance between the buy trade and the edge trade is around a little bit below 4,000 points. Okay, now you take profit on either side. Take profit on this side will be 2,500 points for volatility 75 index, and take profit to the other side is around 2,500 points. So if I'm going to measure 2,500 points above my original trade, I'll be having 909,035.78. So I'm going to set my TP 909,035.78. Okay, that's my TP for the current running trade. Okay, of course, my TP for the edge trade, that will be around measuring 2,500 points below that level. We'll be having something around 900. Okay, 900,035.78. Okay, all right. So for the stop loss, for my original trade, will be the stop loss for this buy trade will be around 200 points below the TP of my sell stop. Okay, so and that will give me stop loss from the calculation, that will be like 835.78. Okay, So that's that. There's a stop loss around here. Okay, now the stop loss for my pending order, this is my pending order, the sell stop is my pending order. Stop loss will be 200 points above the TP of my original buy trade. Okay, so for the pending order, stop loss will be around 909 235.78. Okay, so that's that. So I've got, if I'm gonna delete this, and delete this, so I have let me remove this. So I have my this is my original buy trade. I'm still buying, price is buying, it's going up. Okay, but in case it retraces and refuses to go up further and starts to come down, it's going to trigger my sell stop, which is my pending order. Okay, I've got my pending order TP to be 2,500 points. The edge spacing, the spacing between the original trade and the pending order is a little bit below 4,000 points. Okay, the TP for my original trade is 2,500 points. Okay, now the stop loss for my original trade is 200 points below the TP of my pending order. Okay, and the stop loss for my pending order is 200 points above the TP of my original trade. So I'm just gonna wait, gonna do a waiting game, wait for either price to take out my TP or trigger my pending order. Now, if price triggers my pending order, I'm gonna set another pending order above, around where my original trade is. Okay, so that I'll have something like another edge, which is my second edge, in case price goes against my running orders. Currently, my running order is a buy order. I'm going long, but if it triggers my sell stop, I'll be having two running orders. So I'll quickly place another pending order for to go long buy stop. And if it goes up again and triggers my buy stop, then I'll place the last pending order, which will be another sell stop. But for each edge trade, I'll be multiplying the total opposing trade by 3. Now, currently I have 0.001 as my current trade. The multiplying it by 3, I have 0.003. Okay. Now, multiplying 0.003 by 3, I'll be having 0.009, but I already have an existing 0.001. Removing that from 0.009, that will leave me with 0.008. So the next buy stop, which I'll be placing around here, in case this sell stop gets triggered, will be 0.008. Okay. And if that also gets triggered and my positions are not closed, then I'll place the last pending order, which will be 0.024. Okay, and from there I should be able to know where price will eventually head to. Okay, but for now we have a range. I was expecting price to go up, but price has to range around here. So it's either going to go up and trigger my take profit or trigger my pending order. Then I'll quickly set another pending order. Now the lot size of the next pending order will be 0.008. So if I place that and that gets triggered as well, then the final pending order will be 0.024 for a sell stop. Okay, if that also gets triggered, I won't place any other pending order, because my balance is above $300. So for every $300 I can start, I'm able to start with 0.001 lot size. But if I have $600, I could start with 0.002 lot size. Okay, if I have $900, I can start with 0.003 lot size. So if I'm starting with 0.001, the first edge will be 0.003. The second edge will be 0.008, and the third and final edge will be 0.024. But if I'm starting with 0.002, assuming I have $600, the first edge will be 0.006, the second edge will be 0.016, and the third edge will be 0.0448. But if I'm starting with $900 as my account balance, I could start with 0.003. The first edge will be 0.009. The third edge, the second edge will be 0.024, and the third and final edge will be 0.072. So that's the way it works. So you, at times, price may be in a range, in a ranging structure. Okay, you have to do some waiting. You wait it out. You have to be patient. Okay, and then you have to you need fast fingers so that you can quickly place your trade, place your pending order, and then set your TP and your stop loss. So, but for now, you can easily try to find the direction price is heading to. As price ranges, tends to form a direction. Okay, for now we have like a triangle. On the 15 minutes time frame. You can do this on the 5 minutes time frame. You can do this on the 15 minutes time frame. You can also do it on the 1 minute time frame. Okay, but I prefer the 5 minutes time frame. But for now, we're using the 15 minutes time frame. Okay. Currently, price is ranging. All right. So is either it heads up or goes down. Whatever happens, we're gonna close out either at break even or with some profit. Okay. If we're gonna close out with some profit, I will expect price to continue up. But if we are gonna have some break even, price will trigger the pending order, and then we'll break even. Break even means I'm not losing and I'm not gaining. Okay. But the way this is being set, the way the calculation is done, it's better to gain a small profit if I am to break even. So this strategy, the Grail Hedge strategy, is a very good strategy. You can always use it to win and win when trading volatility 75 index. You can use it on step index. It's just that the settings, the spacing will be a lot different. The lot size will be a lot different. You can use it to trade gold, XAU USD. You can use it to trade Euro USD. You can use it to trade GBP USD. Okay, you can use it to trade forex. But you can't use this Grail Edge strategy to trade spike related indices like boom and crash, like range index. Okay, now price is trying to trigger the sell stop. If the sell stop gets triggered, I'm going to place a buy stop. I'll be placing my buy stop somewhere a little bit below this point. Okay, placing my buy stop there. Let's see what happens. Is it gonna get triggered? Is it gonna get triggered? Is my sell stop gonna get triggered? If it gets triggered, then I'll be looking for break even. I'll be setting the buy stop. Okay, so okay, it gets triggered. So I'll go for the buy stop. Okay, I'll be placing my buy stop at 906,495.78. And the lot size will be 0.008 this time around. Placing the buy stop at 906,495.78. Okay, that's my buy stop. Okay, looking at the screen is where it is. So my buy stop is, so I'm gonna set the TP to be the same TP with the original or the starting buy trade. Okay, so using the same take profit and stop loss, I'll be setting the take profit to be 909 035.78, which is 2,500 points above my pending order. Then I'll be setting the stop loss to 899835.78. Okay, which is 200 points below the sell take profit. I'm talking about 200 points below the take profit of my sell trade. So I have the second edge trade. This is the second pending order in place. This is my first trade. This is the edge. It's been triggered. The edge of my first trade. This the edge is 3 times the lot size of the original trade. This is the original trade. And you can see we are in a range. Okay, when trading volatility 75 index, if you are the breakout, good for you. Price will continue to go in one direction. But if you are in the range, price can easily trigger your stop loss. But instead of you using stop loss, you can use hedge. You can hedge your trade. Okay, but the disadvantage or the bad side of this strategy is at the once the third hedge trade is triggered, if you are unable to know the direction of price, when price will have been ranging for some time and you are unable to know where price may head to, that's the bad side of this strategy. Okay, you should be able to know where price is heading to, and then try to remove the stop loss of the trades. Like if price eventually going up, you remove the stop loss of all buy trades and you set stop loss of all sell trades. Then you have the TP of all buy trades, so that at the end of the day it closes out and you have a break even with some profits. But at the end of the range, at the end of the third hedge trade being triggered, and you see that price is going down, okay, then you expect to leave the TP of the sell orders and remove the stop loss. You expect to leave or allow the TP of the sell orders and remove the TP of the buy orders and leave the stop loss of the buy orders, so that you have all trades closing out in profit at the end of the day. Okay, so for now we have 2 running orders. This is the original trade. This is the first hedge trade. This is the second hedge trade. If price continues to range, we will only place one more hedge trade, which will be our third hedge trade. That's if price continues to range. Okay, we stop at the third hedge trade for the purpose of this strategy. The Grail Hedge strategy is a very good strategy, and we now have an advanced Grail Hedge strategy. A video will be done on that shortly, whereby it's a win-win situation. That's the advanced part of this strategy. Is a win-win situation. For this current strategy, you can either win or break even. But for the advanced part of the Grail Hedge strategy, you don't get to lose, you only win. Okay, that'll be in another video. Make sure you watch out for that video, the advanced Grail Hedge strategy. It's a very good one. You like it. Currently, price is ranging. Okay. we expect a breakout of price either either towards the upper side around here or towards the lower side around here. We have like a triangle. Okay, so all we can do is to expect price to head in one direction, but for now price is ranging. Price is ranging, and when price ranges, always look out for wicks, candle wicks. Okay, like we have a long wick here indicating that price should go up. Okay, we also have another wick here, all right, indicating that price should continue up. So we have 2 wicks, but we have a wick here indicating that price should go down. It has already gone a bit down, but we are having like a wick here and price is heading up. So upside is favored as regards this trade. Upside is favored for now, but let's see what happens. Let's see what happens. Okay, price is attempting to go up. Mind you, we have a pending order above, and if that gets triggered, we'll set one more pending order. Okay, the final pending order will be below, will be around here. Okay, but in as much as price is trying to go up, we can decide not to place the next pending order, which is a sell stop, because it's somehow apparent, it's somehow clear that price will go up. So, but if we decide not to place a sell stop, then we have more buy positions above. Okay, and we have just 0.3 sell position below. Okay, then we'll remove the stop loss of the sell position and then leave the take profit of the buy positions, remove the stop loss of the buy positions and leave the stop loss of the sell position. We remove the TP of the sell position, leave the stop loss of the sell position, then we remove the stop loss of the buy positions and leave the TP of the buy position, so that price will close out upwards and all trades, price will close out all trades upward only because we are expecting price to go up. Now the second edge has been triggered, so and we expect price to continue up, so there is no need to set the third trade, the third pending order. So we'll remove the stop loss of all buy positions. Okay, that's been removed. Remove the stop loss of this buy position, that has been removed as well. Okay, now the next thing to do is to leave the stop loss of the sell position and remove the take profit of the sell position. Okay, so that's that. So these are sell position, has no stop loss, and these are buy positions. We have their TPs above. Okay, no stop loss. We have the TP of the buy position and the stop loss of the sell position. So if you look at the trade to see what's actually happening on the trade, you can see for this original buy trade, we have the TP as 909,035.78. For the second trade, which is our first hedge trade, we have the stop loss 909,235.78, which is 200 points above the TP of the original trade. Then for this buy trade, okay, we have the TP 909.035.78. So we expect price to continue to go up right now. Expect price to continue to go up. No need to place the third edge trade, which is our sell stop. If he plays it, it gets triggered and price now continue to go up. As it's already obvious it would continue to go up, then you may end up in big loss, which is not what you want. Okay, you can already see that price will go up. So just wait for price to go up, and then all your trades will close out in profits as price approaches the resistance area. So you must have a good sense of judgment, okay, for you to use this strategy. It's a very good strategy, but you need the right skill for you to use this strategy to win when trading volatility 75 index. Whatever happens, I expect price to continue to go up. I have a candle here with a wick. I have another bullish candle. I have another bullish candle. 3 bullish candles in a row. That's enough to give me the conviction that price will go up. Okay. Looking at the trades. Okay. I have drawdown on my account, minus 18 for now, and that's because price is still between the two sets of trades. Okay. Now price is heading lower, contrary to my expectation. Price is attempting to go lower, contrary to what I expect price to do. I expect price to go up. But price is attempting to go lower, as it is. If I already have my sell stop of 0.024, which is a third edge trade in place, it will have been triggered by now. And if price goes lower, to close out all my positions. but I knew price would go up. So why allow my third edge trade to get triggered and then price start to go up? As it is right now, price has now broken below the low of the previous candle, which is an indication that we are having a reversal. Okay, now if price closes around this level, I'll be having a bearish engulfing, which will not be good for my edge trade. I do not want price to go down. I want price to continue up. But we can also take this as a retest of the breakout to the higher side. So if it retests the breakout, then it is expected to go up. So it's more of a waiting game. When the first edge trade, whenever the first edge trade gets triggered, then it's more of a waiting game to see how all trades will get closed out. Okay, but on few occasions where price goes your way, you close out in profit. But more occasions where the first pending order gets triggered, then you are said to be in a range. Price is said to be in a range rather, and then you have to do the wait. You have to wait it out. Okay, wait it out by setting pending orders for your edge trade. Set the pending orders, and then you stop at the third pending order when you are not sure of the direction of the trade. Stop at the third pending order. But here for this particular trade, I had the conviction that price will go up. This is a 15 minutes time frame. I expect price to go up, but if it does not go up, I'll have, with this current candle, I'll have a bearish engulfing, which will indicate that price will still go a little bit lower, and that will not be good for my decision. Okay, that will not be good for my decision. If price goes lower, I'm expected to have placed a sell stop of 0.024 here so that everything closes out. But I expect price to go up. Why place a sell stop of a higher edge trade here when I will be carrying more drawdown? I wouldn't want to be in such situation. So I have the conviction that price should go up. But I may be wrong. I may be wrong. I have enough equity to handle whichever direction price goes. Okay, I still have a free margin of 275. Okay, so I'm not in doubt, I'm not scared, I'm not afraid of the trade. I'm confident that whatever happens, I'll close out with a break even or close out with some profit. But for now, my balance is 315.10. Let's see what happens. We're on the 15 minutes time frame. 15 minutes time frame. So the current time is 12:11. I have 4 more minutes to the current candle close. So a lot can still happen within the 4 minutes. A lot can still happen. So like I said, I saw the current candle as a retest. So retest means price breaks out and then retest the breakout point before continue in the new direction. Okay, so price broke out of my triangle, so it as a buy opportunity, but for it to continue up, it had to retest to give a strong footing or to leave a spike behind. Then it will now leverage on that spike and continue up, which is what appears to be doing right now. Okay, price appears to be leaving out a spike or a wick to give it enough footing or enough strong reason to continue up. So currently, the price has changed from bearish to bullish. I have 2 more minutes to the end of the current candle formation, and I expect price to go up. If I had placed the third edge, which is 0.024, much higher than all other lot size. 0.024 is higher than every other lot size. If I have paid the third edge and it is triggered, as price goes up, my balance will have much bigger drawdown, and that will become kind of dangerous for my account. Okay, so if you're going to use this strategy, you have to be very careful. You need the necessary skills to be able to use the strategy. You must have practiced this strategy on the demo account for some time. Don't start to hedge when you don't really know how to hedge. Hedging takes skills. For you to acquire skills, you must have practiced that skill for quite some time for you to become better at it. Okay, time is 12:14. We have just 1 minute less than. Okay, time is 12:15 and the candle has closed. The current 15-minute candle has closed. Okay, another candle has formed. Now we have a pin bar. This pin bar gonna make price go up. Okay, or it's going to make price drop further. If price drop, to be dangerous for my account, to give me more drawdown. Okay, but if price goes up, all my trades will close out, and that is what I want price to do. I want price to leverage on the wicks, this bullish candle wick, to go up further. I also want it to leverage on these 2 weeks candle wicks for it to go up further. But price will go wherever it wants to go. So I'll do more of waiting. Do more of waiting. Okay, we're about to have breakout to the upside of the current range. About to have breakout to the upside of this current range. Okay. All right. You can see the buy trades are now in profit. So as price continues to go up, the buy trades will be more profit, and my balance, I'll have a break even and then close out with some profits. This week, this candle week, okay, shows the strength of the buyers, and then it's 2 candle wicks, okay, also shows that the buyers are in control. Besides, we have price breaking out of my descending trend line above, breaking out above my descending trend line to show that price will try to go up. And if price goes up and gets to my TP, it will trigger the TP of my 2 buy trades and also trigger the stop loss of my 1 and only sell trade. And if that happens, I'll close out with not just break even, some profit. Okay, the buyers have stepped in again, trying to take price up. Okay, it's going up, and my balance is now increasing. All right, as it goes up further, gets closer to my TP and the stop loss of my sell order, and then I'll have a break even and possibly close out with some profit. Okay. The reason why I did not place my third pending order is because I saw our price will go up. If I had placed the 0.024, which is the third hedge trade, it will have been triggered, and then I'll be in a big drawdown as price goes up. I expect price to get to this level and close out all my trades. Currently have a breakout. We have a breakout of this range here. If price to get to this level, price to get to this level, I should have break even. Okay, should have break even around here. If price continues up, I have some profit at the end of the day. If price gets to this level, I should have break even. At break even, I can decide to manually close all my trades, or I can allow it to hit or trigger the take profit so that I can close with some profit. It just depends on whatever I want. The buyers are still trying to push price up. As the buyers try to push price up, this is a resistance area where the sellers step in. Sellers step in whenever price gets to this area. Don't forget, for this type of strategy, your minimum balance should be around $300 for a starting lot size of 0.001, and then your first pending order will be 0.003. Okay, we're now at break even. We're now at break even. No, you can see we are now at break even, and then we start moving into profit as price gets closer to my TP. If price touches my TP and triggers my TP, I'll close with a profit. My current balance is 315.10. I may close with some profit as much as $3. My balance may get up to 318 or 317 thereabouts. So for account balance of $300, you start for using the Grail Edge strategy. Your starting lot size will be 0.001. If your account balance is 600, minimum $600, then your starting lot size should be 0.002. We are at break even and it's on profit. as price get closer to our TP. Okay, price has kissed, closed out. Okay, you can see trade is closed. It was a successful one. If I had not seen that price would go up and I had gone ahead to place my third edge trade of 0.024, I'll be in a big drawdown by now. So as you continue to place the first edge trade, the second edge trade, you need to try and look at possible direction of price, because you're already in a range around here. You're already in a range. So where do you think price will go? Should be able to judge and see. Okay, failure to see where price will head may allow you to place more edge trades. And then if price now goes against your last edge trade, you'll be in a big drawdown. Okay, so that's that about the strategy. It's a very good strategy. Remember, you can use it for forex. You can use it to trade step index. You can use it to trade gold, but the difference will be the spacing, the edge spacing, the lot size. Okay, like I said, there's an advanced Grail edge strategy that will always give you a win-win situation. You always close out in profits. Okay, for the advanced side of it, I'll do a video very soon. I'll do a video very soon on an advanced Grail edge strategy, where you always get to win all the time. Okay, I'll do a video on it, and then you'll learn more on how to trade and win constantly on V75 or on gold or on forex, any forex pair. Okay, but all this is about hedging your losing trade. Hedging your losing trade, so that you close out at break even where there is no loss, no profit, or you close out with some profit. Okay, and remember, when you place your first trade, you have the opportunity to place a hedge trade, the first hedge trade, the second hedge trade, and the third and final hedge trade. But as you start to place your first hedge trade, your second hedge trade, you should be able to understand or identify where price will head to. If you can't still identify where price will head to, then you can go ahead and place your third and final hedge trade. And at that time, you should still be able to identify where price is heading to. And if you know where price is heading to, remove the stop loss and remove the take profit accordingly to the direction where price will head to. Now, for this particular exercise that we just concluded, price, if it had triggered my 0.024, which is the third edge trade, and had given me a drawdown, you can see there's still that opportunity for it to come back to the range area where I can now get to close all my positions. So constantly practicing the Grail edge strategy will give you more insights on how you can trade the strategy effectively to constantly make profit and grow your account. Don't forget, for 0.001 as a starting loss size, your minimum balance must be $300. Okay, and the first edge pending order will be 0.003. The second edge pending order will be 0.008, and the third and final pending order will be 0.024. Before you get to the third pending order, you should be able to know the direction of price. If price is going to go up, no need to place. If price is going to go in a direction which is in favor of your Grail Hedge strategy placement, no need to place the third hedge order. But if you're still unable to know where prices will head to, you can go ahead and place the third hedge order. So that's that. Wait for the advanced side of this strategy. Wait for it on this channel. Don't forget to click the subscribe button. Go ahead and click the subscribe button so that you see more of our videos. Click the like button if you like this video. Click the bell button for notification so that you get notified when we upload the advanced Grail Hedge strategy. Okay, you can also drop comment, ask question if you do not understand any part of this video. Try as much as possible to respond to your question. You can go to our website www.beanfxtrader.com to learn more on how to trade forex and volatility index. You also have another website, fxfables.com. You can visit the website to learn more on how to trade forex and volatility index. Till I come your way next time, is bye.